I'm going to do a walkthrough for exam 1 practice. This will give you an idea of what to expect on the first exam in this course. So Baker Corporation applies manufacturing overhead on the basis of direct labor hours. There's my allocation base. At the beginning of the most recent year, the company based its predetermined overhead rate on a total estimated. So So I have a total estimated overhead of 61,400 and 2,000 estimated direct labor hours. Actual manufacturing overhead for the year amounted to 63,350 and actual direct labor hours were 1,850. So if you'll recall, predetermined overhead rate, that is figured out with estimated numbers. So estimated manufacturing costs, estimated direct labor hours. And then they want to know what the applied manufacturing overhead for the year is closest to. So applied, remember we take predetermined overhead rate multiplied by the actual hours. So estimated is the beginning of the year when we don't know anything. Actual is like it's at the end of the year. The bills have come in, we know what we spent. Applied is somewhere in the middle. We know how many hours we've worked, but all of the bills haven't come in. So it's our second best guess. So it is taken the predetermined overhead rate multiplied by actual hours. So 56,795. Okay. Question 2. And several of these problems, there are lots of ways to figure them out. I'm just showing you how I figured out how to figure them out. So if you have a better way that makes more sense to you, then by all means use it. Okay, what are they telling us? Erlica Incorporated reports that at an activity level of machine hours, in a month, the total variable inspection cost is going to be 423,680, and its total fixed inspection cost is 154,368. Okay. What would be the average inspection cost per activity level at an activity level of 6,700 machine hours? Actually, I'm going to make that over 1. Okay. Okay. So so I know that at any activity level, my fixed cost remains the same. A little bigger for you. So at any activity level, my fixed total is going to be the same. Because that's how fixed costs work. Okay. But variable totals change when the number of hours or the number of units change. So to figure out what the per hour variable cost is, we need to divide the total by the number of machine hours that they use to get that total. So I have $56.20 per hour variable cost. So my total variable cost at 6,700 hours would be the hours times the variable cost per hour. Okay, so at this point, I went too far, but it's okay. You needed to know how to do that. But where they're asking me for is what is the average inspection cost per activity unit, or in other words, per hour at an activity level of 6,700. So really, all I needed to do was figure out the fixed per hour cost when we are at the activity level of 67,000. So, and then add the variable plus the fixed cost at, whoops, at the 67,000. Whoa, there we go. So it's going to be the 89.24. All right. Like the view is just a little too small. Okay, question 3. A soft drink bottler incurred the following factory utility costs. Okay, so this one is going to be cases, and this one is going to be cost. So my utility cost, actually, I'm going to change this. We'll put utility cost on the top and cases on the bottom. And you'll see why in a second. So utility costs are 3,561 when I do 800 cases. And the utility cost is 3,658 when I do 1,200 cases. Factory utility cost is a mixed cost containing both fixed and variable components. The variable factory utility cost per case bottled is closest to. Okay, so we're going to use the high-low method, and I'll explain why this works. So when you have a fixed cost, it means the fixed total stays the same no matter how many cases you bottle. So somewhere in this cost and this cost is the same fixed amount, right? So I need to find out the difference, because the difference between these two costs is the variable cost. It's the only thing that changes between activity levels. So I need to take the difference between the high minus the low cost and the difference between the activity levels, the high activity minus the low activity level. So I get that. So to get the per case, I will take the cost divided by the activity level, or the number of cases. And again, I'm taking the difference between between the high and the low. And that gives me 24 cents per case as my variable. So the second one. All right, question 4. So the best way for me to look through this is to remember in manufacturing overhead, actual numbers are the debits and applied numbers are the credits. Okay. Arvey Corporation has provided data concerning the corporation's manufacturing overhead account for the month of October prior to the closing of the overapplied or underapplied balance to cost of goods sold. The total of the debits to manufacturing overhead account was $71,800. Okay, the total debit was $71,800, and the total credits were $64,300. Okay, so which of the following statements is true? Actual manufacturing overhead incurred during the month was $64,300. Actual is the debit. No, that's not true. Manufacturing overhead transferred from finished goods to cost of goods sold, which is applied, was $71,800. So applied, no. Manufacturing overhead applied to work in process for the month was $71,800. Again, no. Manufacturing overhead for the month was underapplied by $7,500. Well, let's see. Actual minus applied is 7,500, and applied is less than or under actual, so it was underapplied. If it had been overapplied, there would have been a credit balance. But it was a debit balance because the actual is more than applied. So that means applied is under or less than actual. So it was under applied. We did not put enough on the books. Okay. Acton Corporation, which applies manufacturing overhead on the basis of machine hours, has provided the following data for its most recent year of operations. So they gave me estimated overhead and hours, actual overhead and hours. The estimates of the manufacturing overhead of machine hours were made at the beginning of the year for the purpose of computing the company's predetermined overhead rate for the year. The overhead for the year was, and then they wanted to know underapplied or overapplied. So I'm just going to take this and so those are the numbers they gave me. I just like to, so here's my estimated manufacturing overhead and machine hours. And here's my actual manufacturing overhead and machine hours. So we need to figure out applied. If you'll recall, predetermined overhead rate is figured out by taking the estimated numbers. So the estimated manufacturing overhead divided by the estimated hours gives me a predetermined overhead rate of $36.60. I need to get my applied overhead. That is going to be done by taking the predetermined overhead rate times the actual hours. So that's how I get applied. Now that I know applied, I can figure out whether it was over or under applied. So finding the difference. So there's the difference between applied and actual. So applied is what I put in the books. It is more than or over actual. So it was over applied. When applied is more than actual, it is over applied. When applied is less than actual, it is under applied. So applied is more than or over actual. So it is over applied. All right, question 6. Let's see. At the beginning of the year, manufacturing overhead for the year. So I need manufacturing overhead estimate of 283,750. Actual, let's see, at the end of the year, actual direct labor hours was 23,100. The actual manufacturing overhead for the year, whoops, was 268,100. Manufacturing overhead was over applied by 20,650. Okay. If the predetermined overhead rate is based on direct labor hours, then the estimated direct labor hours at the beginning of the year used in the predetermined overhead rate must have been. Okay, so normally we would have that predetermined overhead rate and we would work forward to figure out over or under applied. They want us to work backwards. So the first thing I need to figure out was what was the applied manufacturing overhead? Well, applied was over or more than actual. So I will take my actual manufacturing overhead plus the over applied, and that gets me back to manufacturing overhead applied. Then normally I would take predetermined overhead rate times actual hours to get to applied. So if I work that backwards, I can take the applied divided by, so applied manufacturing overhead divided by actual hours gets me back to the predetermined overhead rate. And then normally I would take the manufacturing overhead divided by the divided by the estimated hours to get to predetermined overhead rate. So I don't have this, so I'm going to take the estimated hours divided by the predetermined overhead rate to get back to the estimated direct labor hours. You just had to work backwards to get back to a number that normally they had given you. All right, question 7. Corsetti Company manufactures and sells pre-washed denim jeans. Large rolls of denim cloth are purchased and are first washed in a giant washing machine. So while the cloth is still in one huge piece, it's washed. After the cloth is dried, it's cut up into jean pattern shapes and sewn together. The completed jeans are sold to various retail chains. Which of the following terms could be used to correctly describe the cost of the soap used to wash the denim? So um, this is for sure going to be an indirect cost because it's used when everything is just in one big piece. So there's no way to assign any part of this cost of the soap to one pair of jeans, which would make it a direct cost. So it is an indirect cost. So the answer to direct cost would be no. So we know right off the bat it's either going to be C or D. Is it a product cost? Is it used to make the product? Yes. So C, it is not a direct cost, but it is a product. All right, question 8. During the month of April, direct labor costs totaled 14,985. Okay, so the labor is 14,985, and direct labor cost 45% of prime. So prime costs are direct labors and direct materials. So I am going to figure out what my direct labor is. I mean, my direct materials. Because I know my total manufacturing costs during April are 75,000. Um, so manufacturing costs are direct labor, direct materials, and manufacturing overhead. So I know direct labor is 45% of direct labor plus direct materials, and direct labor, direct materials plus manufacturing overhead equals 75,000. So I put this here. Okay, so I'm working towards manufacturing overhead. That's what I'm trying to figure out. So if I take the direct labor cost and divide it by the percent it is of prime, that gets me back to direct materials. So now my total manufacturing cost for 75,000, right? That was given to me. Manufacturing overhead then would be equal to 75,000 minus direct materials. So that gets me back to my manufacturing overhead cost. Okay. Question 9, depreciation on manufacturing equipment is a product cost. That is true. It is a product cost, but it is an indirect product cost. Question 10. Okay, they give me direct labor rate for Brent Corporation. Okay, total direct labor rate for the Brent Corporation is $9 an hour. Manufacturing overhead applied to products using a predetermined overhead rate of $6 per direct labor hour. During May, the company purchased $60,000 in raw materials. They are all direct, and they worked 3,200 direct labor hours. The raw materials inventory, all direct materials, was decreased by $3,000. Okay. So, um, between the beginning and end of May, the work in process inventory on May 1st consisted of one job, which had been charged with $4,000 in direct materials, which are the metal raw materials. Work in process inventory, $1,000 in direct materials, on which 300 hours of direct labor time had been worked. There was no work in process inventory on May 31st. The balance in work in process inventory on account on May 1st was, okay, so work in process. Let's see what our T account is going to be doing. Okay, so we had direct materials at 4,000, right? Because that was part of the job. And then we had direct labor, which was labor times 300 hours. And then we have manufacturing overhead, which was predetermined overhead rate times the 300 hours. So add those together. And we have a work in process balance that we started with of 8,500. Hope that helps you with exam 1.